Hey everyone, I'm Ryan Brooks. If you've got cash sitting idle, you're probably asking, should I stay safe or chase new opportunities? The Fed just cut rates for the first time in 2 years, and that means global capital's on the move again.
Over the past few months, institutional investors have quietly shifted their positioning. Some money is moving back into short-term bonds and high-quality fixed income assets like Singapore government bonds or short-duration Fs. The yields aren't exciting, but the stability is. At the same time, we're seeing renewed interest in higher-yield assets, from REITs to quality growth stocks. When rates fall, borrowing gets cheaper, and cash starts flowing out of savings and into markets that can deliver stronger returns.
A rate cut doesn't just boost bonds. It resets how risk is priced. Cheaper money means more business investment, stronger consumer spending, and the illusion of a healthier economy. But behind that optimism, smart money is already making adjustments. They're not chasing every rally, they're positioning ahead of structural change. They know exactly which sectors benefit most from a lower rate world, and which ones are simply bouncing on sentiment.
Rate cuts usually trigger two major flows, one toward growth sectors like tech, retail, travel, and luxury, and another toward small and mid-cap companies that benefit from cheaper borrowing. Not every sector wins. Banks often see their margins squeezed, and insurers struggle to generate yield. Meanwhile, emerging markets start looking more attractive as a weaker US dollar makes dollar-denominated debt easier to repay, drawing new capital back into those regions.
So the real question isn't, should you invest? It's, where should you position? Smart investors are quietly rotating into companies with stable cash flow and solid fundamentals. They're not driven by headline. They're guided by data. A rate cut is just a signal. The real opportunity lies in where the money goes next. And that direction is already written in the data.
No matter what the macro picture looks like, the essence of investing never changes. Own businesses people can live without: internet, telecom, energy, and payment networks. These are the core industries that keep growing even when cycles shift.
I'm Ryan Brooks. Remember, the market doesn't wait for hesitation. The winners are the ones who quietly position while everyone else is still deciding whether to act.